Good morning and welcome back. I just want to say hi to everybody. Although I haven't been online all that much, I have been trading every day. And right now, I'm in the midst of trading Tesla. So let's take a look at the position really quick. Um, I have a I have Thinkorswim behind me, and this is a risk profile. So what this is going to show is where I make or lose money based on where the stock goes. So you can see behind me, or I should say above me, is a chart, and I'm right at the center of um, where I would want things to be on expiration. The lower purple line is P&L for today, and the upper blue line is P&L if we were to if expiration was today. And you can see we're kind of like right in the middle of it right now. Let's play with these. Let's play with the charts right now and take a look and move things around a little bit. So essentially, I have a calendar spread on in Tesla. So if we look at the position here, it looks like a whole hobble jobble jumble. But essentially, what it is I'm long April calls and I'm short front week calls against them. And I have the strikes manipulated in a way where I did come in long today. I came in long something like 30 deltas, but you can see my delta now is down to like 3. Oh, that's kind of a weird. Hold on, let's see if we can fix. There we go. That's a little bit better. Yeah, and let's see if I can move myself to the side here a little bit better. So that's been working out okay. If we go and look at the Greeks for the position, so I'm going to go to the Analyze tab here, go back to that. You can see it's showing me long 3 deltas right here, short 9 gamma. So up a buck, I lose 9 deltas. So long 3 deltas here, the stock goes up a buck, and all of a sudden I'm short 6 deltas. That's kind of the way that works. So I came in long, like the stock went out 207 last night, at which point I was long about 35 deltas. And then with the stock having moved up by about $4 right now, I'm perfectly flat here. Now, yesterday, the stock was up $10, and I maintained my long delta on the way up. I did that by slowly buying call spreads. My strategy here has been to try to keep my deltas close to flat so that I can collect the theta every day. You can see the theta number here is $400 a day. So if I can keep my deltas somewhat near flat, then I'll collect that 400 every day. I was leaning long yesterday, and that sort of worked out, but I'm not going to be lucky all the time. If we do go back to a chart here, let's go back to a better stock chart here. Let's see. And that way we can take a look at things here over. Okay, so here's a Tesla chart. So that is so far this morning. I'm struggling just slightly because I only have one screen for the moment. I need to get my second screen rolling here again. Let's see if I can manipulate this window a little bit to make it smaller so we can see more stuff here. All right, here we go. That's a little bit better. So this is a chart from this morning. You can see it topped out around 212 and a half. But if we do go back and look at a little bit bigger chart, here's a 5-day. You can see kind of up the last 3 days. But if we back up a little more, this is probably a good chart to look at here. And you can see that we've made a couple attempts to get through this sort of 217, 220 area. We made 1, 2, and here's sort of a third attempt. So we were kind of going straight up for a while, but it seems to have sort of found a range. So my strategy right now with this position is probably just to kind of leave it. I felt comfortable kind of chasing the stock up and staying long as it moved up yesterday. But today, with us approaching this level that we kind of found resistance at a couple times, I don't think I want to lean long up here. I think I'd rather stay flat, or if anything, lean short. But the best thing to do kind of when you're collecting theta in a position at times is to just leave it. So I think I'm just going to leave it here for now. If we do start to rip to the upside, part of my position here, let's look at this another way here. So if we look at the front weak position here, you can see the number of options at each spot here. Well, of course, I'm directly in the way. I always end up directly in the way of things, but all right, that's better. So you can see the options at each spot here, and you can see I'm short this spread, this 212, 217 spread. So if we start to move higher, I will probably buy in these short spreads here, and that will keep my delta close to zero as we roll higher. But if we're just kind of hanging around here now, I'm just going to leave the position because every trade you make costs commissions, and I don't want to kind of chop myself up. You know, if we move higher all of a sudden and I get long, and then we move lower again and I get short, I kind of would chop myself up. It would be effectively like kind of buying the stock paying 212 and selling it back out at 208 or something. If we were to like move way higher than way lower. So it would be nice to just kind of leave it. And if we were to just kind of bounce back and forth in this area and I don't touch the position, then I could sort of collect theta every day. That's kind of my plan here. Let's see. So this channel started as a VIX-centered channel, and I want to kind of get back to that a little bit. I have UVXY and UVIX here on our watch list, and UVXY is a $5 ETP right now, and it doesn't interest me very much at $5. I prefer to focus on UVIX just because it's a little bit higher priced issue. I know several people who follow my channel have been doing this, have been executing this sort of bullseye strategy, and that's been working out really well for a while now. And what that is, once again, is to sell at the money front week options in UVIX. So in this case, it might be like the 19 call. So what you do is you sell a small number of another 19 calls, and then on expiration, which would be Friday, you either they go out worthless, or if they're in the money, then you would want to just roll this call. You'd want to buy in the one you're short and sell the next week out the same strike. And the reasons why this works are many, most having to do with the fact that the term structure for the VIX is most of the time in contango, meaning that these products slowly decay over time. If we look at the chart here, for a 20-day chart, it doesn't appear to decay all the time, but if we go out to like a 180-day chart, you start to see the picture a little bit more clearly here, where this thing is just going to slowly decay over time. And so if you're selling at the money calls, not only are you going to benefit from the short delta, but you're also going to collect the decay, the premium in those calls over time. So that strategy has been working really well for a long time now. You can see we've had a nice sort of run. Now, UVIX has only existed since April, so there's not a ton of data on that one if I back up the chart. But here's UVXY, of course, and you can see it's a really nice run. For the whole of last year, we had a nice down move, and the year before was a lot different. But now there are, I'm not advocating for new traders to sell naked calls. Let me just put that out there. That's not something you want to do unless you completely understand the risks. There are other strategies to get short that are a lot safer. So don't quote me on selling naked calls if you're just starting out at this game. A better way to manage your risk would be to maybe buy put spreads. That would be, for example, in UVIX, doing something like, if we pull up the charts here, we would do something like going out to like April and buying the something like the 2017 put spread. Buy the 20 put, sell the 17 put. It's a $3 spread. You could get into it around $2 and collect that $1 over time. That's the sort of idea. You might be a little bit more aggressive and maybe buy something like the 18-15 spread, or even the 17-14 spread, and just over time, this is going to move lower, and you will benefit from being long that put spread. This is a safer way than selling a call, because when you sell a naked call, you have unlimited risk. Now, UVX is not going to go straight up forever, but it could spike up. If the market has a big down move, this could spike way up. And if you don't have enough capital to weather this storm, you're going to be forced to cover your position at very unadvantageous prices. And it just opens a whole quagmire for the new trader. So not recommending the bullseye strategy to brand new traders. Let's take a quick look at the term structure before I get out of here. I appreciate you checking in with me. And yeah, I've just been essentially trading Tesla lately. And the term structure has just been in contango. Right now we're in 4% contango. It's just been hanging out there for a while. Let me see if I can pull it up here. Things get very tricky with just one screen to play with here. But let me see if I can do this. All right, so it's going to take me too long to do it. But anyways, the term structure is in contango right now, and a 4%. And so this stuff is slowly moving lower. Tesla has its first ever investor day tomorrow in Texas. And I think that is going to focus people on the stock and could be a bullish catalyst for the stock. But we're reaching this area that we've bounced off of a couple times. You know, if you look at different charts of Tesla, they tell you completely different things. It's certainly a tough one to trade. So, for example, I was advocating this like 20-day chart to kind of look at things here, gives you a good view. But if we were to widen out to a year chart or even a 180-day chart, well, the picture looks a lot different. There's a 180-day chart, and that almost looks like this chart of the ones we looked at so far looks more bearish to me than anything else. But if we go out to a 3-year chart, well, there you go. There's the story. It got all the way up to 414, and now we're half that price, but we've come off the lows of 104, 105 by a lot. So that's kind of the story of the market too. When looking at a chart like this, it would be instructive to also maybe check out the NASDAQ. NASDAQ kind of looks similar, right? Tesla, NASDAQ. And I think you'll find a lot of big tech stocks will look similar to the NASDAQ. We could, like, if we really wanted to, we could put them next to each other here. There's the ES. So that's where I am, hanging out in Tesla. It's nice to see you guys. Hope all of you are healthy and well. Looking for just Tesla to stay kind of in orbit for the next couple of days. If we can just chill out in the range of 212, 211. Let's go back to our risk chart here. If we can just hang out in that range, we'll collect $3,000, right? That's what that shows right there, the risk chart. So, you know, does Tesla ever stay at one spot? Not really. So, the likelihood that it's going to sit here at 210 for the next 3 days is very, very low. So, but we'll try to keep up with it as it moves, and that's my plan moving forward. Thanks for checking me out today, and I will see you next time on the Short Vol Show Live. Ciao, ciao.